Welcome to the Pump and Dump channel for another video, this time looking at the proposed merger, I would call it, between Noble Energy and Chevron. It does say it's an announced agreement to acquire them, but looking in depth, it kind of is one of these news articles that is written to probably deceive the algorithmic bots that are trading in the market to spoof them. Because here you can see it says it's an all-stock transaction, and that's like Noble Energy gets Chevron shares, so it's kind of a merger. And according to the conversion ratio that's mentioned here of 0.1191 shares of Chevron for each Noble share, it would value Noble at 5 billion or 10.38 per share. So, looking at the situation, I think there are some questions, of course. Number one, is it a fair price? And if I look at it individually, Noble Energy, the fair value that I have for Noble Energy is in the $14 to $15 range, and therefore 10.38 is kind of like a third off. And what it implies in terms of rates of returns on the cash flows that are projected to be earned from Noble's assets, it's kind of a 20% rate of return. So, I do think that that's a bit greedy from Chevron, but there are other factors to consider because I don't know what Chevron is worth. I have not looked at it. I have never tried to attempt to value it properly, so I cannot really assess what the valuation is of Chevron. But based upon the news here that they want to give away shares rather than cash, it obviously suggests that they think their stock is more expensive than their cash is worth. So they don't want to give away their cash, but they're happy to give away shares in their business. Yeah, so looking at now what Noble Energy has become, the way I see it is it's an optionality play on Chevron. You have less downside in a bearish scenario where oil and gas prices keep going down. The reason for that is that the beta of Noble Energy is about twice as high as for Chevron. So in the bearish scenario, oil and gas prices are going down, the valuation of Noble Energy would fall faster than that of Chevron. And therefore this conversion rate here of 0.1191 shares of Chevron for each Noble share, that gives like a downside protection in case oil and gas prices do head lower. So you have like the downside protection now, but also when you're looking at the bullish case of oil and gas prices going up, you also don't have the benefit of the upside. If oil and gas prices go up, you would expect Noble Energy to rise much faster than Chevron in terms of the valuation, and therefore it's a double-edged sword. But the way I see it, it's kind of like, the way I understand it at least, is that they are kind of wanting to acquire them, and Noble shareholders have to agree to it. It's kind of like, it says it's a definitive agreement with Noble Energy, but the way I understand it is that Chevron has made this proposal and Noble Energy shareholders now need to agree and sign off on this. And in the bullish scenario, there is the case to be made that if oil and gas prices are going up substantially, that Chevron is getting too much of the pie, and Chevron and Noble Energy shareholders will be unhappy, and they will ask for Chevron to revise their offer, and maybe they give like 0.15 shares of Chevron, so it becomes 7 shares of Noble instead of 9 shares of Noble for each Chevron share. That is a potential I see here. Now, looking at the question, of course, why did Noble Energy, the management, the CEO, and all those people agree to this deal? I've seen that they have been doing investor presentations and trying to like gather interest from investors to put into their company some money because they need some cash to develop their assets. I don't think they have enough cash flow to develop them themselves, so they need to raise the cash anyway. So it may be that that they are unable to secure the funding at attractive rates. So if the cost of capital is too high of course we're in a recession now, so cash is king. So if the cost of capital is too high, maybe the merger between the two is the best option at this very point in time, and therefore the the management is suggesting that, because the bearish outlook is that oil and gas prices are going to keep staying low and go lower. And in that situation, even though Noble Energy has assets that are very valuable and good, it may be that the company could get into more trouble and have to dilute existing shareholders at a much worse point in time, at a much worse price, let's say. And so yeah, that's kind of how it looks like. So personally, the way I see it is now, buying Noble Energy shares is the way to go, not buying Chevron, because you don't have that embedded optionality of maybe getting a higher bid, and if the market is going down, you don't have this downside protection on Chevron. It's like you don't have any better downside protection, let's say, and at the same time you don't have any upside potential from a higher bid in Chevron than you will have with Noble Energy. So Noble Energy is clearly the way to go in this scenario, and we will see, of course, how this all pans out in the end. But with that said, just remember, as always, this is not investment advice or recommendation to buy or not to buy. I could be wrong on certain things, and even though I do kind of put out my opinion as what I really believe rather than something I'm just promoting, I think it's always important to understand that I could be wrong, and what I say could be partially incorrect, and that could render everything obsolete that I just said. So keep that in mind, and as always, if you have any questions, comments or opinions, you can always share them in the comment section. And if you like the content, don't forget to subscribe, and have a good day.